Hi, this is Shade Foray with Tax Sale Support. I'm here with Stephen Swenson, and this is a tax sale state review for the state of Maryland.
Yeah, exactly. We like to go through and review different states for you and kind of explain how they work. And Maryland has auctions coming up, so we figured Maryland would be a good state to go over.
Sure. Maryland is one of the states that offers tax lien certificates. And so I think we've got roughly a little over a third of the country that does that. They use tax lien certificates. They've got a total of 24 counties, or is it a combination of counties and cities that hold their auctions?
Yeah, exactly. There's a couple of cities like Baltimore City, which actually almost functions as a county. So some of the big cities will function as a county, but essentially there's 24 different counties or cities that will hold tax sales, and they hold them once a year. And most of the counties are going to hold their auctions in the month of May and June, so they're going to be coming up. And one thing that's nice about Maryland is they offer both live auctions and online auctions.
Yeah, so there's opportunities there to buy both ways.
Now, as far as Maryland, like I mentioned, generally the auctions are going to be handled in the month of May and June. Now, as far as the redemption period is actually 6 months. So it's a very short redemption period compared to other states. But one thing that's a little bit unique about Maryland is even though the redemption period is 6 months, you need to foreclose on the property within 2 years. So really any time between 6 months and 2 years after purchasing the tax liens, then you'll start the foreclosure process.
Yeah. In fact, you definitely don't want to go beyond the 2 years because it could basically void the lien that you have on the property. So at the 6 month mark, you definitely want to take some kind of action with the property because it has to be taken before the 2 year time period is up. Also, on the interest rate returns, Maryland's weird in this way in that they don't have a set maximum rate of return that they allow for the state. They sort of allow the counties to set their own interest rate return. So literally, different counties offer different amounts, and you need to be aware of it when you go to invest, because whichever county you're working in most likely has a unique interest rate return that they pay out. Some can be high, some are closer to the 12%.
Yeah, exactly. There's going to be some counties, a couple counties that are 12. A lot of the counties are going to be between 18 and 24. So you at least get a little bit higher interest rate, and it's also a shorter redemption period. It's kind of different than like a Florida where you have 7 years before you lose the tax lien, and you essentially have to wait 2 years to foreclose. In Maryland, in 6 months, you need to foreclose. You can foreclose, and it needs to be done within 6 months of the property becoming delinquent. So a little bit different strategy, more of a short-term lien strategy, I guess I'd say.
Yeah. Now, the bidding with the sales starts at the opening bid amount, which is essentially a collection of the delinquent taxes and fees that are owed. But from there, what they do is pretty well different from most states.
Yeah, essentially they have what's called a premium bid system, and there's a couple of states out there that do this, but generally it's not as common.
Well, they normally do it with tax deeds with premium bid, more so than liens anyway.
Yeah. A state like Colorado, it would be an example, another lien state that has a premium. But essentially, the amount that you bid over the tax lien is considered the overbid. And this overbid amount does not earn interest. But generally, you're not going to actually pay the overbid amount unless you foreclose on the property and acquire the property. So unless you go through the foreclosure and are going to acquire the property, you're not going to essentially pay that overbid amount.
Yeah. Now, if you do go to foreclose on the property, that's where this overbid amount does have to be paid. So what we're thinking probably has happened in the past is because the overbid wasn't something that you would pay unless you were to actually foreclose on the property, our guess is that investors must have been bidding up the price up beyond what would make any kind of rational sense. And they were doing that because they assumed they wouldn't have to pay that amount unless they were going to foreclose, and so it was just a way to win the property, basically to win all of your bids without needing to fork over any money. So I think that they put in place this overbid system that essentially requires a portion of the overbid amount if it goes above a certain amount.
Yeah, exactly. Now this really won't come into place unless you're bidding over 40% of the assessed value. And our thought behind that is if you're bidding 40% over the assessed value, you're not making a good investment anyway. And so they have kind of a system in place where if you do bid over that 40% of the assessed value, they have a way to determine how much you'll essentially pay in overbid. So the only way that you're actually going to pay an overbid at the time of sale is if you bid over 40% of the assessed value in the overbid amount, which is something we wouldn't recommend doing.
Yeah, and if you do happen to bid up the amount to above the 40%, they basically what they have is a system in place that forces you to pay basically the premium amount is going to be 20% roughly of the difference between your bid and the assessed value, essentially the 40% of cash value on the property. So if you bid up a property high enough, then you could end up where you need to pay over, the overbid, the opening bid amount. I guess up to a certain point. If you bid it up high enough, then you're not just paying the $1,000. You'd have to pay a portion of the overbid. But as long as you don't go over that amount, you don't have to worry about the premium down there. You can see here the adds to it. If you're under that amount, the premium doesn't apply.
Yeah. So if you're bidding an overbid that's reasonable, like for example, this is $1,000 worth of delinquent taxes, and if you were bidding an overbid of $1,200 or $1,500 above, or $200 or $500 above the tax amount, then your interest rate will be affected to a degree because you're not going to earn interest off of that overbid, but you're still going to be making a good investment. It's really when you start getting crazy with these overbid amounts that this is going to come into play, and that's really kind of not the type of deals that we're going to look with. We're going to look for deals that we pay a limited overbid, an amount that makes sense. So if this property's worth $100,000 and there's only $1,000 worth of delinquent taxes, and we're earning 24% interest on it, we may bid it up to $2,000 because that $2,000 is still backed against a $100,000 property, and if we foreclose on it, we don't mind paying that additional $1,000 to get the property.
Yeah, but as you can see, as the number increases, it makes less and less sense, overall, because you're paying out much more out of pocket, and therefore your interest rate drops dramatically. And so, I think that limits how good of a deal you're going to get if you bid that up too high. And keep in mind that the vast majority of liens are going to redeem here at some point. So redemption is going to be the most likely outcome anyway. But the overbid is really only going to be applicable if beyond what you're paying if you go to foreclose.
Yeah. It's a little bit different. If you're investing in Maryland, then we definitely recommend going through, and because each county's a little bit different, studying that county's facts and rules and all of that type of information so you understand exactly how to bid.
Yeah, in fact, with Maryland, it's one of those states where you really have to read specifically into exactly how the county itself operates, because there can be some real variation between counties in how they do things. Like we said, too, the redemption period is short. It's unlike most tax liens in that way, in that you can basically start foreclosing after 6 months. They also use a little bit different terminology there in Maryland than they do in other places. But really, after 6 months, you can begin that process, which is going to result in either acquiring the property or having it redeemed.
Yeah, and the foreclosure is a judicial process. So unless you're there in person and you're able to attend the courthouse and do the right documents and all of that type of stuff, you're usually going to hire an attorney to foreclose on the property. Now, one thing that's nice in Maryland is that the legal fees, so any attorney fees, things like a title search, those different types of things that you pay to start the foreclosure and to begin the foreclosure are recoverable. So the property owner will have to pay those to you if they essentially redeem the property and you don't finish with the foreclosure.
Yeah, in fact, Maryland uses what's known as a non-self-executing foreclosure, which is self-executing foreclosures are used in states kind of like Florida, where they basically handle all of the foreclosure aspect of the properties. And if the county doesn't handle that for you, if they have the investor do that, that's known as a non-self-executing. It's basically what they utilize here, which only becomes a factor if you need to foreclose on the property. Meaning if it doesn't redeem, you need to foreclose. And the fact that the fees are recoverable is a nice aspect of that. You don't have to worry about losing any kind of money there. And once you get to this point, the chances of acquiring the property go up pretty dramatically.
Yeah, exactly. Now, as far as over-the-counters, not all counties in Maryland will offer over-the-counter list, but out of the 22 counties, about 14 different counties offer over-the-counter list, and of course they're available on taxlsupport.com. So the county will kind of determine, even before this Shade was reading a county that doesn't allow over-the-counters. I was looking at a county that does allow over-the-counters. But the advantage of the over-the-counters is you're not going to pay an overbid amount at all. You're just going to pay the delinquent tax, and you're also going to get that guaranteed highest interest rate return. Plus, you can buy these tax liens already into their redemption period. So for those investors that are looking to buy a tax lien and start foreclosing very quickly, this could be a strategy for you where you buy tax liens, essentially force the sale, and increase your chances of actually getting a property.
Yeah, I think it is a tax lien buying process that certainly you can cater to try to acquire property. Maybe more so than some other states. I mean, if you were to focus on over-the-counter properties, you could probably increase your chances of getting a property that's going to go to foreclosure. But still, the majority of liens end up redeeming, and the interest rate return that's paid out in Maryland is pretty good for the most part.
Yeah, exactly. One thing about Maryland as well is there tends to be less competition than there is in other states like Florida. Florida has all of their auctions, their tax lien auctions happening in the month of May and June. And so because of that, a lot of the institutional investors and some other investors will maybe look at Florida, and sometimes Maryland gets overlooked. In addition to that, it's a little bit more complicated.
Yeah, they certainly don't do any favors by their system of trying to explain the overbid. It's overly complicated, I think, for what it really is. Our guess is that they just put it in place to try to avoid these situations where people are just bidding up the price to win a property, not worried about the overbid amount. But that can be an advantage to you as an investor because most investors may avoid it because it's a little bit more complicated than other systems, or at least it seems that way, from the outside. And because of that, I think you're going to find more opportunities to invest.
Yeah, they offer a higher interest rate return. You can foreclose within a short period of time, a short redemption period. So there definitely is benefits to Maryland, even though the process to buy them is a little bit more complicated.
Yeah. Now, if you'd like more information about tax lien or tax deed investing, or if you haven't downloaded our free book, Tax Lien Investor Secrets, you're welcome to do so. You can use the link in the description below, or you can also go to secretsoftaxlieninvesting.com.
Yeah, exactly. This is our ebook. It's one of the best ebooks that we found that's available. It's available for free, so you just need to go to the website and download it. Like Shade mentioned, it'll be available in the description.
Yeah, if you like more of these videos, feel free to subscribe and like the video below.
Exactly. Thank you.